Welcome to today's episode of PC24 RETV. I hope that you are having a great day today. But before I start the program, I would like to congratulate each and every one of you if you are celebrating your birthday, your anniversary, birth of newborn in your family, closing of your property, and if you have secured an insurance on your income, protected it for your beloved ones for many years to come, then yeah, you all deserve great congratulations. So I am very happy that you are taking proactive actions to protect yourself and your family. So the day has been going on smooth. I feel it's slightly a bit warmer. I don't know why, if it's only with me or all of you are feeling the same way. Please feel free to interact with us using any of the social media. We are currently broadcasting on Facebook. So there are two channels. One is my personal line. One is my group EC24 RETV on social media, and then it is live on YouTube. Again, two channels: my personal and PC24 RETV channel. You can always find this if you put at sign of, some say it at the rate of, some just use ampersand, the at sign PC24 RETV. You would be able to find me there. It's also being broadcast live on Twitter and LinkedIn and also TikTok. So I see Remy joined a while ago, but then she quickly left. This broadcast is not for everyone. We only talk information related to the real estate and mortgage industry. Sometimes some guests who come on this platform, such as insurance brokers, paralegals, immigration consultants, some professional from far off places like BC or Saskatoon. So sometimes those people do come over there and they talk about their own product, which I'm very happy to host for them. So we spoke a bit about some statistics yesterday where I mentioned that half of Canadians are they have lost hope to buy their house. This is what I understand. The reason being recession. The rates of these various mortgage products have really gone very high, and there's no. It's not a joke when we say that the stress test, not test, stress test is way too high. So any rate that you get, add 2% on top of it to qualify for your mortgage. That is a big pain in the. You understand what I wanted to say. So those things will still stay with us, and unfortunately, there is nothing we can do to control that. This is how things are at this point. So we will live with it for a while, and hopefully somewhere around 2025, or if it is early, then towards end of 2024, we may see policy rates dropping down by 1.5% to 1.75%, or 100 basis point to, let's say, 175 basis points. Many financial institutions, they they predicted that end of 2024 we would see policy rate at 3.50. So that means it would be a drop of 1.5 from where we stand now. But on the other hand, the the inflation has gone up. With inflation going up, there are some kind of waves in the industry that Bank of Canada may not increase interest rate by 25 basis point, the minimum jump it usually takes. But if you believe the statement of Deputy governor of Bank of Canada, I forgot her name, but she said these kind of things are not uncommon in economy, so or with inflation. Sometimes it goes down, sometimes it goes up, but the rates that were increased in the past are having the desired effect. The desired effect is people are unable to buy their food. People are unable to shop twice for their kids now. People are reeling under so much pressure that it is hard to fathom sitting in those air conditioned rooms and taking millions in salaries. Those are the ground facts from ground zero. When you talk to people and you see how they are conserving every penny these days, it has become a really tough game to survive. We talk about crime all the time. Well, crime is natural to grow when people are struggling to get some money for their livelihood. These things go side hand in hand. One thing goes down, the other thing picks up. So this is how things are. I do not understand why the government or Bank of Canada could not drop, increase the rates by 25 basis points at a stretch. What was the need of increasing the rates by 100 basis point, 175 basis point, 150 basis point? Why was that hurry? Now, it is a political atmosphere at this time. Elections are nearing us. So, someone told me that this time, regardless of whatever happens, Bank of Canada will not increase the interest rate. So, well, I said, wow. If after all those efforts they could only drop 4.1%, could they not take it an easy path? They let the inflation go up first in the first place, and now they were in a rush to bring it down. On the other hand, after this announcement of inflation, and we noticed there was a jump in the yield of the 5-year government bond, Government of Canada bond. That means that drives fixed rates up. Those dynamics keep changing, and there are many mortgages that are going to be renewed very soon. Within 6 months to 12 months, there will be many mortgages renewing, and that would be very dangerous situation for those people who will suddenly find themselves in a position where they won't be able to afford the payment. So if I could find those numbers again, so the mortgage renewals, so 65% of mortgages are due to renew within the next 3 years. From these, 9% expect to renew within the next 6 months, and 10% expect to renew their mortgages within the next 6 to 12 months. So basically, 20% of mortgages among 65%. This is from 65%. So 20% of these mortgages are going to be renewed between 6 to 12 months, and when the rates would still be very high. That means high rates. Are we going to see lots of scenarios where people are forced to sell their homes, where the mortgage owed is more than the value of property? I also hear that very soon the property values may drop further down 10%, and I don't know from which point, from today's point or from some other point in the timeline. Which point they are taking, we'll see if we could find out. But this is what is going on at this moment. Things are getting pretty nasty for many, many, many hardworking families of Ontario and elsewhere. But at the same time, we do not do anything with that. This is a tragedy of life. What do you think about it? What are your thoughts about this? Do you think if you were the governor of Bank of Canada, you would have done something differently? What would be your take on this? How would you handle this situation? This always, boggles my mind. How can you do things in a better way? Well, everybody has some better, options, because there are cases when economy went down, but someone came up and then straightened the economy in the very same circumstances. So do you think governor is incompetent to fix this situation? Should there be a better governor? Should there be less political interference? Is this all driven to benefit a few people? Like, because some people take recession as transfer of wealth from poorer to richer. Is that what we are looking at? Every couple years this thing happens. Why can't they keep it steady? Well, I'm just talking as a layman. I'm not no expert on economic affairs and how to handle the money. All I know is that people lose money every second of the day. If it is in bank, it loses the value. If it is spent, it loses value. You earn $500, you pay income tax on that. So it leaves with you with around $350, for example. Then you buy something with that money, you pay HST on top. So you lose another value. 350 maybe becomes 300. And the vendor who gets your money pays income tax. Maybe he pays a slightly lesser slab than we pay because it's on corporate. Let's say he pays $50 tax, just a random figure. Now the money's worth is 250. Now that vendor buys from another vendor, these suppliers, and so on. At the end, that $500 just becomes zero. This is so strange how this whole whirlpool of money has been created where people do not retain any money at all. And the value of money keeps dropping and dropping and dropping and dropping. So, what do you think should have been done to fix this situation in this circumstance? Could there be a better alternative where they could say, oh, you know what? If had the Bank of Canada followed this strategy, things could have been better. Was their decision to implement high rates like two, three, four jumps in one announcement, was it justified? What do you think? What do you have to say about that? I am really eager to hear your point of view. What did you say about that? We talk so much on TikTok and we watch those funny videos. Yeah, so coming back to, well, I'm slightly deviating, but recently there have been instances where some very intimate moments of people have been shared online accidentally or intentionally. But then we all start judging them. We all start making memes on them. And is that right? Is that not considered online bullying? I would really request each and every one of you, if you are watching this on TikTok, to stop harassing people, to let them live their own life. Once you said something, just walk away. There's no need to share it, make it a viral video. You probably do not understand how it affects the mindset of the person who just became a victim of bullying. People take drastic action. Drastic actions may be ending their lives too. So please, 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 do not be a reason of someone's death. So please let them live. Forgive them for what they have sinned in your sense, in your thought process. So this is what I really want to touch base upon. A very simple advice. Please leave people where they are. If you do not give leverage to those videos, they will never go viral. Was that video intentional or a mischief by someone? Was the data stolen? Everybody has become an expert online. So I just want to say, please be not the cause of someone's, harassment. Take it easy, relax. Let them live their life the way they want to live. So the speculation here is it's speculation. Do not think that this is really going to happen. It's just an information. It may prove wrong later on. But there is an institution called Oxford Economics. Oxford Economics predicted that recession expected to drive home prices down another 10%. So, in its economic and housing outlook release that was released, I guess, yesterday, uh, Oxford Economics is forecasting a mild recession by the end of this year. That this will lead to an additional 10% decline in average home prices by early next year. Now, I know what you're thinking. Oh, I would want to wait. Wait, but at the same time, do not forget that the regulator of the banking industry, called OSFI, Office of Superintendent of Financial Institution, is monitoring the capped variable rate mortgages. These are those mortgages where payment doesn't change regardless of interest rate. It's a contract. You contracted with the bank that regardless of whatever happens, my payment will be X dollars. Even though your interest payment plus principal component may be Y, where Y is bigger than X, but you are getting into negative amortization, where the negative portion keeps adding to your principal component. Now you're paying interest over interest, plus your principal does not change. It stays where it is. So you end up paying way more interest. Some people have resorted to at least cover the interest component if they cannot cover the principal component, so that they are not paying double interest, interest over interest over interest. So this is where people are struggling right now. So OSFI is keeping an eye on those variable mortgages with a fixed payment setup. So probably they may stop that thing. There are a few banks that do not do them already. I do not remember their names off my mind, but there are, I guess, two or three banks who just do adjustable rate variable mortgages. So if you are in that mortgage, you have to be cautious. At the time of renewal, things may change. So the rates today, if I may share my rate screen with you, the rates today are looking at something like this. I hope you can see this screen. This is an app called Mopolo. So it's Mortgage Alliance app. You can always download it, and there is a section where you have to select a broker. You can put any broker that you like in Mortgage Alliance, or if not, then you can put my name, Paul Chima, and then I will show up and we will be connected. So you can talk to me, you can ask me, you can do so many things with this amazing app. And this is a very fast loading app. These are the rates, and if I'm looking at rates here on my screen here, so the rate for 1 year is 6.44. This is a conventional fixed rate mortgage. All these rates that you're looking at, they are conventional rates. That means it is 20% equity yours and 80% from the financial institution. It is 80-20 mortgage, which is conventional, and you will see the rates are 7.70 for 1 year open, but 1 year closed is 6.44%. So this is a kind of increase of 1.3, I think 26%, right? Or 0.26%, 1.26% higher. So for 2 years, you see the rates are 6.14%. 3 years, 5.99. As the term increases, the rates are coming down. 4 year, 5.79, but 5 year, it went to 6.09. And if you ask me the logic for this, I don't have any. I don't know why the rates are 6.09 for 5-year term. So is this because the banks want you to go on 4-year terms? I don't know that. But 5-year high ratio mortgages are those mortgages where you pay less than 20% down payment. These are insured mortgages, and an insurer kicks in, such as CMSC, Genworth, and the guarantee. So I have not seen anyone taking 7, 10, 5-year, yeah, 7, 10-year mortgages, but I have seen people mostly go 5-year term, mostly. But this time, around the last 1 or 2 years, ever since the rates started going up, people started choosing lower terms, 2-year term, 3-year term, assuming that the rates will go down and they will not have to pay prepayment penalty, which was smart thinking. So 5-year variable rate is at 6.25%, and the prime rate is 7.20. The last line that you are seeing is qualifying rate. I don't know why this is the only one in French. Everything else is in English language. So it's taux de qualification 5.25%. This is not true. It is 5.25% if your interest rate is below that. But if the interest rate given to you goes beyond this, then you add 2% on top. That is 200 basis points on top of whatever rate the bank gives you. Let's say the bank gives you a 5-year rate for 609, then your qualifying rate would be 809. What happens when your rate goes to 8.09? Would you be able to sustain the mortgage? That's the whole purpose of the stress test. So I will do a quick calculation for you very soon and tell you how the rate components affect your qualification and what happens when the rate changes. So this stress test, and I do not see any leniency on the part of OSFI that they will drop it. It still stays where it is. Are we expecting higher rates? Is are the lenders thinking, oh well, the rates may go well up to 8%? I do not think so, but I cannot say that with certainty. Things are totally different, right? Things are very weird out there. And like I hear all the time that due to elections coming closer, the Bank of Canada may just disregard this rate hike. But let's see how much integrity and professionalism Bank of Canada shows this time. What are the logics they are putting forward? Inflation went 4% from last year. In July, it was 3.3%. The core inflation is 3.9%, and the median is, I think, close to or above 4%. So these numbers are not happy numbers with Bank of Canada, and that certainly is not. On the other side, we are seeing that because the living cost has gone up, employees are asking their employers to increase their wages. So pressure is building up. Unfillable work days are also increasing. It was 160,000 days last year. They are saying it was 49% higher than the last 10 years leading up to the pandemic. That is from 2010 to 2019, and then after 2019, this unfillable hour, this is the hour that were lost due to various reasons such as strikes or COVID or whatever, 160,000, which is a 49% jump over the previous decades unfillable work hours. So those situations are kind of very confusing. If you have never heard of this, same was with me. I have to struggle and understand this terminology, but now I came up with this and it makes all the sense. They also look at the loss to the corporate and the economy when people do not work, when they were expected to work. So these things are very enlightening anyways. So now I told you that I will be talking, I will show you the difference in calculations. We'll pick up a mortgage and we're going to use our calculator here. So let's see what we can get. If you are, I guess I should be able to do something right here. Affordability calculator. So let's say your monthly household income, two people, are like $10,000, right? And property taxes are, let's say, $4,500. It's monthly. Let me put down that as $370. Just a fancy number. Now, if you are paying other loans, let's say you are paying car loan and credit cards, your payments are about 550 more or less. These are monthly payments, and the rate that you're going to get is 6.09, right? And amortization is 25 years. We are talking about high ratio mortgage right now, right? 25-year amortization, you can only borrow a maximum of $419,000 in change, 420 if you round it down, or 419. It could be anywhere in between 419 and 420. So now that's all you can get. But tell me, what kind of house can you purchase with this price? You will add your down payment on top. If you are putting down, let's say 20%, or if you're putting down 20%, then amortization will go to 30 years. But if you're putting down 5%, then there will be other implications such as CMSC, mortgage default insurance. The rate can go up to 4.1% of your loan amount, which gets added, but you do not pay any interest on that money. So 419,000 plus your down payment 50,000, your purchase price comes down to 450, 470, $500,000. We have nothing in that price range, at least in the greater Toronto area or even up to Hamilton. What are you going to buy? So, and this is a income of $120,000. Previously, we could get a mortgage of around $650,000 with the same income. So I have not touched the qualifying criteria yet. Your monthly payments with 6.09% rate of interest comes down to $2,705 just for 419,000 and some change. But now, because you are being qualified at 2% on top, your interest rate goes 8.09%, and look at your mortgage range. You can borrow a maximum of $352,000 more or less. Will that get you a house somewhere? That is where the problem comes in. People do not have 20%. Most of the people, even those repeat buyers who already had a house, they want to refinance because of drainage of equity due to inflation and high rates. They don't have 20% equity in the houses anymore. You understand what I'm trying to tell you? This is what happens when the qualifying criteria kicks in. You can still get more. Let's say your income is 15,000 every month and is a steady income. At the qualifying rate, which is 8.09%, you can only borrow $560,000. It doesn't cover. Maybe you can find a house between $620,000 to $670,000, and then there are closing costs on top. Closing costs, you have to be careful about the land transfer tax, because I see people get confused when it comes to pay the closing cost. They think the closing cost will be taken care of by itself. It doesn't. People usually forget that component, but banks look at it. So as a ballpark number, consider 1.5% as the closing cost, more or less. It may be less, it may be more. If you are a first time home buyer, then you will get a break of $4,000 on your land transfer. I hope that helps. We'll come back after a quick break. We'll talk more about reverse mortgage and some other aspect of mortgage industry, plus real estate numbers from other jurisdictions. Stay with me. Thank you. Are you thinking of selling your home? You are covered. From my experience of 14 plus years in the real estate industry, this is what I have come to know. There are three major concerns that any home seller would want their realtor to answer. Number one, how much is their home worth? Number two, how long will it take to sell their house? And number three, what will the agent do to make it sell? I have answers to all these questions. To schedule your one-on-one appointment, call me at 647-424-0358. Once again, Paul Chima, broker with Remax Prime Properties. My phone number to call is 647-424-0358. Call me now and get moving.
From a vast experience in immigration industry, this is what I've figured out. Clients want to know if their application is submitted in a timely fashion, what a representative can do to serve best interest of their client. Clients are informed on a regular basis about the progress of their application. We deliver what we promise. My phone number is 647-465-8894 or reach me out at 639-998-1992.
Are you thinking of a career change or adding another one to your portfolio? Well, you are thinking right. Call Sarabjit Luddar at 416-879-3039 from Beyond Care Insurance Solutions. She also deals in life, long-term, travel, critical illness, disability insurance. Give her a call today at 416-879-3039. This is what we can tell you. She will always give you the right advice and help you find out if being an insurance advisor is your piece of cake. Are you looking for a reliable legal office that can handle your closing in the most effective manner? If yes, please get in touch with Rakesh Joshi at 416-213-8600. Joshi Law Office provides all the legal advices about real estate law, business law, immigration laws, notarization and affidavits, wills and trust. Give them a call today, 416-213-8600. ਅਵੰਚਿਆ ਬੜਾ ਖੁਸ਼ ਤੁਰਿਆ ਹੋਣਾ ਕਿ ਲਾਟਰੀ ਲੂਟਰੀ ਲੱਗ ਗਈ ਤੇਰੀ। ਕਾਸ਼ ਇਦਾਂ ਹੀ ਹੁੰਦਾ, ਲਾਟਰੀ ਲੱਗਦੀ। ਵੈਸੇ ਗੱਲ ਤੇ ਲਾਟਰੀ ਵਰਗੀ ਹੈ। ਮੈਂ ਆਪਣੀ ਲਾਈਫ ਦਾ ਬੀਮਾ ਕਰਵਾ ਕੇ ਆਇਆ ਤੇ ਜੇ ਮੈਨੂੰ ਕੁਝ ਹੋ ਗਿਆ ਤੇ ਮੇਰੇ ਪਰਿਵਾਰ ਨੂੰ ਮੇਰੇ ਮਗਰੋਂ ਕੋਈ $1 ਮਿਲੀਅਨ ਮਿਲ ਜਾਊਗਾ। ਉਹ ਅੱਛਾ, ਇਹ ਕਿੱਦਾਂ? ਉਹ ਜੇ ਤੈਨੂੰ ਜਾਣਕਾਰੀ ਚਾਹੀਦੀ ਹੈ ਤਾਂ ਕਮਲਜੀਤ ਬੋਲਾ ਨੂੰ ਸੰਪਰਕ ਕਰ। ਉਹਨਾਂ ਦਾ ਫੋਨ ਨੰਬਰ 647-772-1481। ਹੁਣੇ ਹੀ ਕਰ ਲੈ ਫੋਨ, ਬੈਠੇ ਨੇ, ਨਹੀਂ ਤਾਂ ਮੈਸੇਜ ਜ਼ਰੂਰ ਛੱਡ ਦੇਈਂ। ਉਹ ਬੱਲੇ ਤੇਰੇ। PC24 ਦੇ ਪ੍ਰੋਗਰਾਮ 5 ਚੈਨਲਾਂ ਤੇ ਬੜੇ ਸ਼ੌਕ ਨਾਲ ਦੇਖੇ ਜਾਂਦੇ ਨੇ। ਜੇ ਤੁਸੀਂ ਆਪਣਾ ਬਿਜ਼ਨਸ ਸਾਡੇ ਨਾਲ ਪ੍ਰਮੋਟ ਕਰਨਾ ਚਾਹੁੰਦੇ ਹੋ ਤਾਂ 647-333-2273 ਤੇ ਕਾਲ ਕਰੋ। ਕੁਝ ਸਮੇਂ ਵਾਸਤੇ ਇਹ ਸੇਵਾਵਾਂ ਬਿਲਕੁਲ ਮੁਫਤ ਦਿੱਤੀਆਂ ਜਾ ਰਹੀਆਂ ਨੇ। 647-333-2273 Welcome back to PC24's remaining segment. So, as promised, I'm going to give you a bit insight into what a reverse mortgage is. Very few people are aware of reverse mortgage. I guess yesterday I gave the number as 6%. Many people don't even know what this means. Reverse mortgage is a product that is opposite of mortgage. That's why it's the reverse. So what is actual mortgage? An actual mortgage is where you take a loan from the bank and then you pay monthly payment. This is the conventional way of lending. But there is another option available where people do not pay any monthly payments, but they still get the money. So the options are you can get money in a one lump sum. If you are buying a house, if you are buying an investment property, or if you have to fund your grandchildren or children's education, you can take the money. Or if you just want to go out to vacation, or if you have some critical illness where you have no other source of income but you need money to survive, right? So you need that. And there are cases when people, they just want to age in place. And living in old age homes can be pretty expensive. Correct me if I'm wrong. I do not have done any research on that, but I have heard from many people that it is pretty expensive. And then there are long waiting lines. Sometimes people have to wait a couple of years before they get admitted into those old age homes. So, well, I guess that is true. What I want to drive the point here is when you are in those circumstances, what are your options? Are you going to go this route where you file an application for some old age home or you move away and all those things? Some people are very much connected to their neighborhood and they like the openness of their semis, detached, big houses, and nobody's there. They're empty nester. Nobody lives there. And unfortunately, when families can barely support themselves, it becomes hard for them to support their elders too. This is not right, but this is a bitter fact of life as well. The result is parents feel neglected. They have no other source of income. And the old age pension and the retirement funds, they are not enough to survive. So for those people, reverse mortgage comes as a boon. It's a blessing in disguise because when you take a reverse mortgage, as I told you earlier, there are options. You can take money in one lump sum, or you can tell the financing institution that, okay, you know what, I want this much money, but pay me $2,000 every month. And this is how I would just add supplement to my pension. And so you can live handsomely. You can hire a cleaner, you can get someone to do landscaping, you can do hell lot of activity with the money because your other expenses are literally negligible. Like you are not commuting anymore, you are not driving anywhere, you do not need tons of groceries, you do not have so many visitors coming to your house that expenses will be much. So those things do affect your overall expenses, and I believe they get reduced. And rest is up to you how you want to handle your expenses. So now, so reverse mortgage enables you to live and age in your place. How cool is that? You live in your house, you enjoy the luxury, you enjoy your neighborhood that you have loved for so long, and you do not have to be in a pitiable situation. And there are, I guess, nurses that come to your house to take care of you. So, so are you saying, Paul, that there are no interest payments there? There are. There is interest component, there is principal component because you took a loan. A loan has to be repaid like everything. There's nothing that you don't have to pay in Canada or maybe elsewhere in this world. You have to pay. That means it's getting hotter, so I'm just turning on the AC here. I don't know why it's so hot. So now the interest accrues. The interest accrues on the loan, right? So, but at any time, this interest is this overall amount that you have to pay does not exceed the property's market value. You still leave the property with some equity in your hand, but it has given you money and they are not collecting anything from you in the beginning, right? You have the option. You may pay interest payment if you want, or you may not pay interest payment that you want. That's your option, but your monthly payments can be zero. So there are different ways they calculate how they will give you the mortgage, the reverse mortgage. There are two institutions that give you the mortgage. I'm going to talk with you about a new institution that has that gives you reverse mortgage for a 5-year term. It is subject to renewal, but they have some ifs and buts. But because absolutely your property value should support the loan. So they will give you up to 40% of your equity. If your property value is $1 million, you can take $400,000 out of it. No monthly payment. If you are reeling under stress and you need cash, this could be the best option for you. Take the money and then you are not paying anything. But it doesn't mean that when you pay that amount, your payment, your overall payable will be, let's say, $1.6 million, while the house value is still $1.2 million. That is not going to happen. It will always be below your maximum house value. This is their promise. And it is not that you came to me and I gave you the product. You will be run through your lawyer, so you can have an independent legal representation or independent legal advice, and the lawyer is going to explain you everything related to the product and how you are going to pay and how much will be payable, the formulas, the calculation, everything will be told to you by your lawyer. And then if you like the idea, then you will come back to me and say, Paul, I want this reverse mortgage. Okay? When you come back and with ILR or ILA in your hand, we will be happy to fund the deal for you. So this product is for 5 years. If you have done bankruptcy in the past, we need it to be 7 years old bankruptcy, 7-year pass. You can go for this product, 7-year pass. There should not be any loan on the property. If there are any loans, you will pay that with this 40% maximum loan to your value that the lender will give you. And your credit minimum should be 640. 640 credit. If there is a bankruptcy in the family or the applicant has done bankruptcy, it has to be 7-year older bankruptcy. Income is confirmed, but it is not confirmed to pay mortgage. It is confirmed to make sure you can service your other debts and property tax. If you want to pay that money from the property taxes from this income, maybe you can include that. It has to be put through to the financial institution and they will give final okay to that. So it cannot be registered in a corporation or a company name. This loan will be registered against your personal name. Make sure the property is in your name, and there is a lender fee, and we will talk about that when the time comes. So maximum amount that you can borrow is $1.5 million. So 40% of whatever you have. So that takes us to, I guess, value of your property to be more than $6 million, I guess, right? Oh no, $1.5 million. If we double that, that will become 80%, 3 million, maybe under $4 million. So 40% of that amount will be $1.5 million. So, and the thing is, if you want to pay this product off anytime, there are no penalties. Just pay that off. So, and it's not that you pay, let's say you took $400,000 like we started in the beginning, and then you tell me, I want to pay $200,000. No, that's not going to happen. You will have to pay the entire amount in one sum, right? That is prepayment, 100% prepayment. And this will be a first position mortgage. That means there will be no other lender. If you want a second lender, well, you can go somewhere else to have more money or more loan. That may be possible, but there are some lenders that may support, but it has to be run through the lender if they allow you to go there. The property should be occupied by the owner. No rentals are included. Freehold residential, no condominiums. Freehold residential, no condominiums. That's what you are be eligible for. And if there are land, I think it will be maximum 10 acres around that. You will be required to get an appraisal done on the property if it is over $1 million. And we have some definite set of inspectors that will go and check your value. This is easy and easy game. Fantastic product. 40% given right off, and you will seek independent legal advice or representation for everything before you say, yes, I want this loan, I want this reverse product. So term length is 5 years, but after 5 years, if everything is okay, the property can still support, your income can still support the debt and property taxes. Well, they will give you, they will renew the term at that time. So this is one aspect of it. But there is another product which is called chip mortgage or reverse mortgage. So in this scenario that I discussed, there is no age limit. Even if you are 25-year-old, that's fine. The property in your name, they will do the chip reverse mortgage. But if you go to the regular product, which is the reverse mortgage, which got chip mortgages, CHIP mortgages, then you must be 55 years old. This is the important thing. For chip mortgages, you should be 55 years old. If you are below that age, you do not qualify under regular chip mortgage. So chip reverse mortgage is available only and only if you are 55 years of age, and you can access up to 55% of the equity. 55% loan to value you can get. So reverse mortgage or chip mortgage, you must be 55 years or older. If it is in two names, both person have to be above 55, right? So primary residence must remain in the home. Same for the product that I just told you, 40% versus 55%. So no income, no credit score are required with the regular reverse mortgage. But a fair credit score is required, 640, in the product that I just told you. So you must prove in the regular insurance, in the regular reverse mortgage, that you can cover property taxes, insurance, and other ownership expenses. This is the same for both these products. Chip mortgage versus the mortgage, reverse mortgage I just mentioned. So, so you can receive funds anyway in monthly payments or as a lump sum. But in case of the product I told you, 40%, you can only get the product in one lump sum. You can deposit it in some bank or some product where you can get monthly payments, but they will give you money as one sum. So the interest rate for reverse mortgage, through chip mortgages, is fixed or variable. But with this product, it is only 5-year open fixed rate, pay anytime. So variable rate mortgages are tied on to the prime rate. That means if variable rate changes with regular reverse mortgage, your payment may be different. So in case of reverse mortgages, no monthly payment if you leave your home for more than 6 months, even for medical reasons, fail to pay property taxes or insurance, or your home is not maintained correctly, your loan becomes payable right away. That is something you must understand, right? So this is critical. If you are away from home for any reason and are unable to pay insurance, taxes, or you don't maintain property, you have to pay the entire loan right away. But in the other product, the alternative product, there are no monthly payments. The loan is due at the end of 5 years with the opportunity to refinance or renew whatever it is. The loan becomes due if you fail to pay property taxes or insurance. And the refinancing may be subject to a new appraisal and a refinancing fee. But the beauty is you get money much easier than with the reverse mortgage. So 6 months, if you don't pay reverse mortgage in 6 months with the regular product, then you are going to pay off the entire amount, becomes due. You cannot leave, but nothing is said in the product that I told you that you have to be in the property. But yes, you can rent it for sure. So in risk protection, what is the risk protection? The risk protection under the unconventional reverse mortgage that I told you is this: amount owed will never be more than what your home is worth, even if the balance exceeds the home value. They will always come down to the home's worth. They will never exceed the home worth. Same is the case with the regular chip mortgage or reverse mortgage. There are no penalties if you want to pay the alternative reverse mortgage. It is fully open. But if you want to pay, you have to pay in full. There are no partial repayments. Early repayment incurs a penalty under regular chip mortgages. That's where the problem is. So the chip mortgages are administered by home equity bank. Okay, this mortgage that I'm just telling you is with a different and independent lender, much easier, much better, and quicker. If you are in need of reverse mortgage, or if you need some money, your house is worth $1 million, you may get 40% of that as a reverse mortgage. I'm going to repeat the whole criteria again. With the product that we have, you will pay lender fee, broker fee. We'll tell you when the time comes, but you can access 40% equity of your property, right? There is no age limit. You may be 20 years old, you may be 60-year-old, you may be 80 years old. You will get 40%. You will have to prove that you can still manage your property taxes and other related debts on the property or your personal life. That's what you have to prove. And there are no penalties if you want to pay the loan anytime within this 5-year term. But whenever you have to pay in full. No partial payments are accepted. right? So in the regular chip mortgage from the home equity bank, you will pay the entire monies back if you leave the house for more than 6 months or 6 months. That means it may be due to medical reason, you may be hospitalized, but reverse mortgage becomes due for full payment in 6 months. This data sheet is as I have see that, but I do not warrant or represent that this is 100% accurate. So when we give the product at that time, whatever the situation prevails, we will bring it forward to you, and you will go to your lawyer and get it verified at that time. Everything will be on your contract. On the documentation the lender gives you to get independent legal advice, we will not fund the deal if you do not give us the independent legal advice documentation. This is very firm. So the amount that you owe on the reverse mortgage will never exceed the home's worth, even if the balance is much higher. Your property value is 1.2, but the accrued interest and all those things are way higher. Then you are still not paying that. You are paying whatever your property is worth. But I'm not scaring you. This doesn't seem like it will ever go higher because it's just 40% equity, 5-year term. It should be easy. Subject to refinance at some cost when the time comes, but it all depends on the new appraisal and your ability to keep paying your regular debts and the property taxes. If you stop paying property taxes in both these cases, right, the entire amount becomes due at that. I hope this information is useful to you. If you need some more information on that, feel free to give me a call. My numbers are on the screen, 647 and I really hope that this was a great information for you, because I don't think with so less people knowing this product, that it is not fully utilized product. So this is something you may think of utilizing. If your elders have a house which is paid up and you need money today, you may not even have to sell the house, right? If you are paying too much payment and your mortgage is just below 40%, well, this product will support you. Though you are not paying anything, your cash flow increases. So I think I will have to stop at this point. It is 7:28 or 29 p.m. on my clock. So I have to take your leave now. But before I leave, I must request you to call me if there is if you need any information about any of the product I just spoke about. I'm open to take questions from you, and if you really want it, just call me 647-424-0358, 647-333-2273. We are looking for some houses to list in the Fletcher's Meadow area and Northwest Brampton. There are people who want to buy houses there. If you have a house in Fletcher's Meadow and Northwest Brampton, you can call me. And what I want to say on top, if you are a resident of Fletcher's Meadow and Northwest Brampton, then I have some free deal for you. Get your roofs inspected for any damage to them before the winter arrives. It is completely free. We will not charge any single cent. To submit your request for free roof shingle inspection, please go to my website www.gtaforsalehomes.com, find the link and then hit that. If I could show you quickly, gtaforsalehomes.com, and you just have to find this link and it says free offer, I guess. If I'm pretty confident that I made it active, but let me see if my guys has put it up there. If not, it will be there very soon. Yeah, it doesn't. It is a hidden page, but it is there. I will send the link or QR in my broadcast for tomorrow. Tomorrow is Friday. We'll have immigration advisor telling us about new changes, and as we are all aware that India and Canada has some, you know, kind of a dispute of principles and values. The visas application have been stopped. Who can travel? Who cannot travel? I will try to ask this question from our immigration consultant, and I hope to get the right answers for you. So before I say goodbye, I would like to send my heartfelt condolences to the families of those people who have lost a beloved one on this day. May God Almighty grant peace to the departed soul and their rest in peace. And at the same time, may God give you courage and strength to get over this harshest time of your life. God bless you all. Thank you very much for staying with me, being here for a second or 2 seconds, whatever the duration you were here. I appreciate that. If there are ever questions, this video is up on the internet. Feel free to call me. We are live on PC24RETV. This is a YouTube channel and a Facebook group. Thank you very much, guys. God bless you all. Take care. Bye bye.